Alright everyone, hope everyone had a great weekend. This is Josh Taylor and we're going to go through a few trades that I'm looking at today, and we're going to go through the market preview. And the first thing I'm looking at here is the Pound New Zealand. Now what I'm looking at here is the Pound New Zealand daily chart, and you can see here that I have a trend line drawn, and let's see what the date is, right around the date of beginning of September 2012, that this pair began ranging its way down, but it had a solid support level around the 93.87 area that it was holding as a nice support bottom. Okay, now it's because this thing has held a support so strongly, we're going to look at that is going to be a solid level of resistance as well. So you notice, just like with any pair, except for like here, once in a while you get these types of days where types of periods, I guess, when you say, where price would just hit down. But even though you can see that there are still plenty of red candles where the price was going down, but then it would go back up, down, back up. But here it was moving up and down slowly, and then it went to a sideways channel, which is a great opportunity to range trade right in here. And so basically, here's what we've done. Price has basically formed this pennant pattern. It's pushed its way down, which is already setting itself up for a downward push through, and it forced, basically it squeezed itself down and broke through this 93.87. So what we're looking for is, number one, where's the trend on this pair? You can see it's obviously down. It's been trending down. In fact, it's over the last few days, it's been trending down extremely strong. It just dropped through the roof. Once it bounced off and hit this level and broke through, it's broke through solid. So here's what we're going to do. We're looking for a selling opportunity on this pair. The best place to sell this pair, because price, when it drives down through this strongly, and then you can see this little candle, which basically means price is kind of going, I'm not really sure if we want to push down farther. And now we've got this almost inside candle forming. Now the market just opening up. It is Sunday night here, almost 6 p.m. Eastern time, so the Asian market is just kind of getting rolling here a little bit. And so basically, I'm looking for the optimal entry on this trade. Now here's what it could do. This trade could literally just keep on shooting down and we do not find a good entry point, okay? But what we are waiting for is a retracement, because this pair obviously does pull back, especially when price pulls back down this strongly. You will tend to many times have a pullback before it will continue down. So we are gonna put a sell position here right at 193.80, and then we'll look deeper down onto a 4-hour chart. On this pair, most likely, because the average range on some of these candles is pretty significant. We're looking at 150 pips. So what I'm going to do is put a sell position here at 193.80 and put a 100 pip stop, and then I'm looking for a profit target here right at 1900, maybe slightly before that, because a lot of times price will pull back right before it hits that level. So 190.20. So that's that for the Pound New Zealand. Let's go check out some other trades. All right, so right here I'm looking at the EURUSD daily chart, and you can see that the EURUSD has been range bound here for quite some time. In fact, it went range bound. In fact, you can see long term that this level here has been a solid support. Remember, I talked about in other videos that support becomes resistance, resistance becomes support. So this became a solid support level, resistance level. When it finally broke through, it's kept up a level of support. 12800 was a level of support here. In fact, we'll draw that in. We got a nice little support level here. So I would expect a small bounce at that level. Let's darken that up a little bit. Okay, and one thing I'm going to do here as well is go look at forexfactory.com, and let's look at tomorrow's news. I want to make sure that we don't have a lot of potentially negative euro news. We don't, and the reason we're looking at that is because if we had some euro news that could cause this thing to move significantly, because I'm expecting this 128 level to have a somewhat of a bounce, at least a little bit of a bounce. In fact, let me draw a line here at 12800. It's a little tight in there. Yeah, you can even see right in here, just it's definitely a key level. The bigger key level would be where it's at right now. The 12700 mark is a little, seems to be a little bit stronger. But I do expect a bounce. So here's what I would look at on this trade. If you want to take a shorter term trade, I would expect, because it's been range bound, and we can see that this thing's come down. In fact, I'm going to pull this down a little bit further because it seems like this is a better level right there at the 3120 range area. That would have been a great opportunity to sell a few days ago. Now this thing is dropping, and I expect it to hit 12800, and then we should see a small bounce up. In fact, the 127.23, 127.20 area would probably be even a better opportunity for a bounce. 127, yeah, 127 actually is a little bit more solid level. So expect a couple of areas of bouncing right here. If you want to, in fact, let's look at this candle here real quick. This candle hit and then it shot back up 35. Let's see, quite a ways, 75 pips. I would almost say on this trade right here, because we don't have a lot of euro negative news, as long as the euro continues moving itself, and right now the average range, daily range on this pair is running, I don't have ATR set up on this, but on average, this thing's moving 80 to 100 pips. So we are 90 pips away. So if this pair moved between now and tomorrow sometime 90 pips, that means it's already pushed its average daily range. And I've talked about this in some of the videos where price will tend to do a rubber band effect, especially once it's pushed down to its average daily range. So what I'm going to be doing is setting up two buy positions. One, a shorter term buy at 12800 with tighter stop, maybe a 40 pip stop, 40 pip, maybe a 60 pip profit target, and I'll watch that one very carefully. If I see price hesitating, I'll get out, I'll close out early. And a little bit longer term trade, 12700. And of course, I'll probably end up buying at 127.12 because a lot of times it won't come all the way down to that level. So we're looking at two potential trades there. Short term, because it's got a solid base at 12800 for a small bounce, but we still are on the daily chart ranging down. So we don't want to be in that trade too long, but you can take a counter trade bounce. Okay, it has a small bounce off that line, and then we'll take a trade down here at 12700, probably 127.12 is what I usually take. All right, so I'm looking at a pound dollar chart. This is the daily chart. And you can see that here, price is pulling down, came up and hit the 62% retracement level, has been working its way down. But we just do have a solid base level, which is also the 38% retracement of this downswing. At what, right at the 16000 mark. Now I was in a long position here that I got in right down in this range. Price hit and bounced back up. We got into a nice buy position, and we're up. Right now it's not doing as great as I thought it was. I was expecting a bigger bounce. But this is December, and we can expect a lot of times we'll see a lot slower ranging markets, a lot slower moving markets. And so what I'm doing is I just closed out that trade, took the profit, and I reset the trade to buy at 160.005. Now I'm going to tell you now, I've got a 65 pip stop, but I am not going to allow that trade to go that far against me. If it breaks under 160.0 and continues staying there for any significant amount of time, I'm just going to close it out early and take the small loss, because I am looking at this price ever since, what's the date here, November 15th. So we're talking about 3.5 weeks or so. Price has been working its way up. Now here's what we can't tell, and folks, this is where a lot of people don't understand. We get emails all the time, and we tell people we don't respond to these emails. But people ask us, "Where's the pound going?" We can't figure that out. If we knew all of that, we'd be the wealthiest people on earth. Forex is a game of probabilities. So we're looking for the highest probability opportunities, not guaranteed opportunities. And so that's how we trade. It's the only way to trade. In fact, since we've been here for the last few minutes, about a minute or so talking, price actually dropped down several pips. I do expect price to come all the way down close to this base level and at least take a small bounce up. Just if you decide to take a trade right under that range, keep it tight. Don't allow it to go too deep, because what we don't know is right here, if this is a reversal, and price is working its way back up over the long trend. We don't see how this is trending up. Had a pullback, and then it's pushing its way back up again. We don't know if this is a continuation of this uptrend or if this was a retracement of this downtrend. You understand? So we're kind of stuck at both levels of not understanding where this thing is going to go. But I would expect a solid bounce right off that level. So you can at least get in there and take a few pips most likely, but just keep it tight. Let's go to the next trade. Okay, here we're looking at the dollar Swiss daily chart. And I'm going to zoom this in a little bit. But you can see how we are pretty much range bound, which is expected for December. You're going to get a lot of range-bound trades. We need to look for a solid opportunity to get into this trade. And I have a buy position on this trade to get in around this level here, slightly above actually. I'm not sure if we're going to hit that level. I'm going to tell you this though: if price comes all the way up to 9,500, I am going to expect a little bit of a push down. So we may take a small scalp on that trade. It is a two-layered level. This figure, and it's a 38% retracement of this downswing that already rejected once very strongly. Came up right on it and boom, dropped down again. So I would expect an opportunity to sell here. We'll continue watching that. I'm not going to set up any trade for that yet, but I would expect at least a 30-40 pip bounce on the worst case, or potential reversal. So I'd probably keep a really tight stop here, 30 to 50 pips, most likely 40 to 50, and take this thing down as far as it can go. As soon as price was up 30 or 40 pips, I'll probably close out positions, close it at move the stop on the remainder to break even, and see how far the thing will run. Sometimes you can get a 200-300 pip run, and that long run on those partial positions is actually bigger than the profit would have been if you would have taken a smaller scalp. So let's go look at the next pair. All right, we're looking at the dollar yen, and you can see here since what wrote this date, around November 22nd, right before Thanksgiving. Pretty much what happens around the holidays, you tend to get price to get into a consolidation mode. What happens is a lot of traders don't work past Thanksgiving, and I know this in the previous businesses I was in before, and trading for many years, that many times I did not work around. Once it hit Thanksgiving, I literally was out of my positions. I didn't start trading again until the beginning of January. So a lot of traders do that. So when that happens, this is why you see around this time prices going into consolidation mode. Okay, and a lot of people don't trade very well in consolidation mode, but if you've read my report about range trading, this is actually a great opportunity. Now here's one thing I would say: there is an opportunity to sell this pair right around here. Let's figure out what this line is. This is about the 82.70 range, so we're about 20 pips away from that. But the problem is with this trade that we still are, for the most part, uptrending. So usually when you see price going up, and then goes to consolidation, it eventually breaks through and continues up. So I would be more apt to buy this pair than I would be to sell it. I'm going to be watching this for my mirror trader customers. Depending on how price hesitates at this level, I may take a short sell and just get in and out with some small pips. But I'd be more apt to be buying this pair at the 81.70 range, so I'd put in here 81.80. Because you have to give some difference in price differential with the spread with your broker. So 81.80, I'd be looking to buy this pair for that'd be more solid. You can take a sell here, but you're taking a risk that price could eventually pop its head up through there, take you out. Could pop back into the range, or it can continue up to this level. Okay, here we're looking at the dollar Canadian daily chart, and you can see that we were, at certain periods of time, this pair tends to go seriously range bound, which is a great opportunity to buy and sell this pair. I love it around here. We did very well at the beginning of the year this year, range trading this pair. But back around then, late February into April, the market for the most part was range bound. We cleaned house. We were in March. I know we made over 2,000 pips, and you can sort of see how right now that this pair is kind of doing something similar to that. I was in a buy position here because of this key level, but price continues to push down. So I'm going to be more apt to be selling this pair. Actually, you know what? I'm going to be more apt to just wait. What we can't do is figure out, because what we don't know is if price is breaking through this level and going to continue down this level, or if it kind of just blew past a little bit and it's going to continue staying in this range. So for now, I'm going to be working my way out of closing that position. I'm literally like 7 pips away before price pushes up and takes me out at break even. Actually, I've got it set for 1 pip, so I'll make 1 pip, no big deal. But then I'm just going to watch. I need to make sure that this level is going to hold, and where this pair actually is range bound, rather than having it break down through. Now, if price continues to break through tomorrow, next day, whatever, and price keeps coming down, then I'm going to be looking to sell this pair right up at the 0.9900 mark as a sell opportunity when it retraces. But right now, I'm going to work my way out of my trade and just sit back and wait a little bit. Okay, we're looking at the Aussie dollar daily chart. Now this thing is all drawn up. I've got trend lines drawn up from way back. This is a mess. I need to get in here and clean this up. But you can see here that price is broken up above the 0488 rate mark, and we may pull back into this range. I've got a buy position here waiting. It's been waiting for quite a while to buy at 1.0420 and stop down in this range here, and then having it shoot up. But I'm not sure what it's going to do. I do believe ultimately the Aussie dollar is going to break up. We just need to wait for a solid entry for this thing to pull back, get us into a good position to shoot up, and at least up to the 10600 range. I would expect. So that's what we're looking for in the Aussie dollar. All right, so let's look at the pound yen. This is the pound yen daily chart. Here's what we've seen. This thing has been trending up for quite some time. Long term went up, came back down, and is still working its way back up into this level. But we're seeing some serious consolidation here, and I'm going to expect that when you see an extremely sharp price movement like you have seen since, what's the date here? When price started, where you at here, man? It is around the middle of November 14th, 2012. The price is shot up on this pair. Now, obviously, I wish I would have seen this. In fact, here's what I did have. I already had a trend line drawn out on this thing, and I was already looking for a buy opportunity. I decided not to, and look at that. I wish I would have, but you know what? That's part of trading. Okay, you can't carve spilled milk. You take the best opportunities you can. You cannot take every opportunity. But what we did is price has been worked its way up here. Now is in the consolidation level. There are a lot of trade opportunities if you break down into the 4-hour and 1-hour charts. And my mirror trader customers are going to definitely get some trades off of this, as long as this pair continues to move sideways like this. But I'm going to expect long term that the pound yen is going to have a pullback. I'm looking for a pullback. Right now, price is at 132.31. And this thing can move pretty sharply in one day. I have a buy position right around in here at 30.50 with a pretty deep stop. I think 120 pips on that thing. Looking for a good bounce and having price shoot back up. But I would expect, and this is why you see some hesitation here, that price has struggled in this area for quite some time. In fact, if you pull back, I know this is messy, but all in this area here, and this is a 100 pip range in this area. Price has had some real struggles getting through here, even at this level here, and so price is going to be hesitating here for a little while. It could potentially reverse itself and work its way back down before it continues back up again. That's what we're waiting on. But I am looking for a small buy up and down in that range there. Okay, here I'm looking at the Euro Yen daily chart. Now, one thing I've noticed here is this thing is a little bit more, in my opinion, a little bit more visually easy to pull out potential trade opportunities. We can see here that we do have a key level. If I zoom deeper and see how far back this goes, got some good levels here, but even better here because we're already up at that point there. If I zoom in a little bit, you can see that this area here was hit and then rejected, the 150.34 range. Let's go down to a 4-hour chart and see what we're looking at here on this thing, because I do have a buy position set at 105.20. that I'm looking at right in this range here. And I would expect price to come down. Now here's another area here. The 104.60 would be a good area here. But you can see that price is starting to work its way back down. It came all the way right up to 108. So and it's still ranging forward at this point. Up as in an uptrend, we're just looking for a slight pullback. So right now prices look like it's pulling back over the last couple of days, and we're looking for a buy position right down in this range here. My stop is below this key level here. I think I've got a 120 pip stop on this. On the euro yen, pound yen, I usually use deeper stops when we're trading off the daily charts because these things can move pretty strong. Not like they used to be though. The pound yen used to be a 300 pip a day mover. 5-6 years ago, that was an aggressive vehicle to trade. But now it's because the market volume has changed. The market's changed. It's just like you as a person. I want you to understand that all these currency pairs change. The longer you become a trader, you start recognizing patterns. Like some levels. In fact, I'm working on the new training course. I'm going to be explaining some of this. But some of these currency pairs tend to gravitate towards bounces off of the 20 levels, off the 50 levels. Like in other words, 101.50. 101.20. Some pairs have a different characteristics, and as you as a person, you have different characteristics as well. And so one thing you get to understand, and I'm going to explain this a lot more in depth in my Forex training course that's coming up. That I'm actually working on. It'll be launched out in January. And it's going to be over 40 hours worth of training. Very, very detailed. Some pretty cool stuff. Probably some stuff you've never seen anywhere else. I guarantee it. And we're going to explain how some of the personalities of some of the pairs, we're going to get very detailed into some of that. If you're watching this from our website, directly underneath this video is a link to go check out a video on a special we're running. I'm talking about how you can get the training course for free. It's pretty dang cool. So let's go check out the next pair real quick. Now here we go. Here's our New Zealand dollar daily chart. Now, if you see this, in fact, I talked about this in my range trading course, the little mini course that I put together, that we, back in April and March of 2012, this year, we cleaned house in such a big way by trading the bottoms and the tops of this range. This price was in a range here. We were buying, selling at the top of the range, buying, selling. We got stopped out here, but then it broke back into range. We got back in again. And then when it went range bound into the next range, once it broke in, what happens to support? Support becomes resistance. Resistance becomes support. And they start into a new range. Once it eventually broke down through, and it continued all the way through. But right now, price kind of, not quite as beautiful as that, but it kind of went into semi-range. It's almost a range within a range. So we have all the way up to this level that we're at right now. The price is in a larger range, and then it's in a smaller range. But the reality is we're also very seriously working towards an uptrend. We are in a pretty strong uptrend at this point. So I have a buy position to buy at 81.50. I don't think this price is going to drop down. In fact, we took a trade here a couple days ago. Right, it was a good trade. In fact, it was in profit at one point, and then turned around and just hammered through, man. And we ended up getting stopped out on that trade. But you can see here that we do have price that has hit this level here, this 83.50, and bounced right back off. In fact, we could have seen that ahead of time and seen that we're going to get a bounce, even a small bounce. And here's the cool thing about this. And I want to work on a video here for you guys in the future that not all pips are created equal. I know a lot of our trades we are shooting for 60 to 100 pips, but when you see an opportunity on a daily chart where price is rejected strongly several times at the 83.50 level, boom, boom, you could have gone in there, put a tight 30 pip stop right at this level a couple days ago. And on Friday, today's Sunday, the market's just opening up, which is now Monday for Asia. Price came right up to this level. Let's look at where price came up to. In fact, normally I put a sell position, 5 or 6 pips in, so maybe 83.45, 83.44. But see where price went. Price went as high as 83.48. So if we would have taken a sell position, where we saw price moving up and saw that this was a key level, we could have taken a sell here with a tight 30 pip stop. Price came all the way down as low as 83.10, so it would have been 40 pips. And if you would have, risking 1% of your account balance, you would have made about a 1.33% return if you closed that trade out. Okay, that would have been a nice little trade. So 1.33%. Now, if you have a 100 pip stop, that trade's got to move 133 pips before you get the same return. So it is workable to take these counter trend bounces. So I'll get a lot more in depth on that in my course coming up. But I did not take that trade. I'm looking more for long positions now on this trade than I am this range. But I can tell you that prices potentially set a nice bottom here at the 82.50, and we'll see if it'll go range bound, if it'll go north, or what's going to happen. But I am going to close out my current pending position on that trade until I can see what this pair is going to continue doing. All right, so the last pair I want to look at today is the Aussie yen. And you can see here that Aussie yen has basically been going on a sideways range for quite a little while. In fact, I'm going to see how this looks on the 4-hour chart. It's probably easier to pull up. There we go. Let's see how we went range bound for a little while. There's opportunities here, but I noticed that price started slowly but surely creeping up, giving me kind of an idea that price was going to break up through. But what I would be looking for now are more small time buying opportunities here at the 86.20 mark, and maybe put a 40 pip stop and then try to pull a 40 to 60 pip run on this thing. So that's it for that, because this pair is ranging up on a long-term level. Let's look at a daily chart. In fact, let's look at a weekly chart. Weekly chart, you can see this thing is continuing moving up. I would expect it to come all the way up to the 8800 mark before we have a bounce. This one, if you're going to trade off the weekly chart, you got to realize you got to put a pretty deep stop, but you get basically some direction. You can see here, remember I talked about 80% of the time a currency pair trades in a range. You can see that this thing pretty much runs between 7,500 and 8,800. We're right getting close to the point where we're hitting the top of this range based on a weekly chart. So I'm going to expect that even though we will have a push up to this level, especially since pretty much all the yen cross pairs are going north right now because of the weakness of the yen, I would expect we'd be looking for reversal levels right around the 8,800 for this pair to continue to work its way down over a period of time, and we'll start getting some pullback. So let's look at the 4-hour chart. Yeah, I'm going to actually look for entry levels around here, the 86.19 range, a tight stop, 30 pips, something like that. And see if we can't squeeze 30-40 pips out of that trade. So anyway, that's it for today's analysis. One thing I want you to check out is underneath this video. If you're watching from YouTube, you can click on that link to go to our webpage to get the information. But if you're watching this from our webpage, which most likely you are, directly underneath this video, we are running a special right now. It's going to be closed up very, very shortly on how you can get our Pro Signals Direct for basically a lifetime membership for an unbelievable price. In fact, we split it up to a payment plan that's going to help you out. And then also we have our Mirror Trader Pro service. We're offering an annual service for a killer price, save you a bunch of money. And on top of that, my new FX course is coming out. Actually coming out here in about a month, 4 or 5 weeks. It'll be finished. That course is going to be selling for $597. It's going to be very, very, very detailed, the most detailed training course out there about Forex and how to trade. And it's going to blow your mind. We are going to offer that to you for free. So all of our customers that sign up directly underneath this video for either a lifetime membership to Pro Signals Direct, pay one lifetime fee and you're paid up for life, or Mirror Trader Pro annual, you're going to get that course absolutely free. Okay, and you got to check out the video. It's a short video. It'd be well worth your time to check it out. But anyway, we're here to help you. Any questions you have, send our reply to this email where you got this video, and which is support@tradeadvisorpro.com. Our team is here to help you in any way we can. Have a great one.